draw the profile. We place the entry at the beginning of this high volume cluster. Stop loss below this, it has hit our first take profit. Draw it into this volume point of control. 1-to-1 profit grab here, our volume profile based trend setup. Footprint chart. So if I zoom the candles, now this is a footprint chart. If I zoom down, this is where smart money, big banks build up their positions. If you don't use footprint charts and volume profile analysis, if you just look at basic candles, you can't see this story that aggressive sellers has been absorbed by passive buyers. So, and that is why the wick was formed into this candle. It confirms that buyers are in control because the negative delta now has changed into positive delta. So that is where we banked 3 profitable trades. Welcome to another live stream session. What I have here open is the Euro FX futures chart. So before the live stream, we took a couple of trades as well, which I will give you a brief breakdown on those trades as well. So we were looking for bullish setups. The reason is you can see on Friday, due to Fed news, strong push up to upwards. And in this price push up, we can see volume was accumulated before the push up over here. So this is our volume profile based volume accumulation setup. So you can see the volume got accumulated and immediately pushed up after that with this huge push up. So we can see a high volume node has been formed over here. So because of that reason, we were looking for a price retracement into this high volume cluster over here. So yesterday the price came all the way down here. Because of that, we had a buy limit order placed. So when we place a buy limit order, basically what we did was we placed the entry at the beginning of this high volume cluster over here. Draw this using the volume profile tool. So basically you can use these tools, volume analysis, and then you can use the market profile TPO. So once you draw it over here, so you could see the range build up. So basically what you do is you cover that area and you draw the profile if to the price leg, to the price swing over here. So that's where you can see the volume build up. So basically when we place the buy limit order, we place the entry at the beginning of this high volume cluster, and then we place the stop loss below this high volume cluster where the volume is low compared to this high volume cluster and volume point of control. You can see the volume is low over here. So we place the stop loss over here. So, and we kept this buy limit order, and overnight session, our entry has got tagged, and because we were not monitoring it, we just set up a 1-to-1 risk reward profit. So you can see price has tagged our entry and there has been some drawdown, but after the drawdown, it has gone and hit our first take profit over here. So overnight, it was a winning trade. So once the retracement completes, you can see it reacted to this high volume zone over here, and then the price pushed up, retraced, and then you can see a strong push up. So basically for that strong push up, when we see a sharp displacement upwards, then basically what we did was we again draw that fixed range volume profile into this price swing. So you can see a swing up, retracement, swing up. So we draw it into this area. Then we can see in that price push up, you can see the high volume cluster is over here, volume point of control. So for this, then into this price swing leg up, if you consider this area, we call this as our volume profile base trend setup, because you can see there's a small trend being formed here after the retracement. So in this, we were waiting for the price to retrace down into this high volume cluster in this volume point of control area. So you can see we placed another buy limit order over here just above this high volume cluster, the beginning of the high volume cluster over here, and then we place the stop loss below this swing low over here. And because it's just soon after the retracement of this leg, and then the price started pushing up, so we placed the entry, and once the buy limit order got triggered, we just left it for a 1-to-1 quick trade over here. So you can see it was a quick 1-to-1 trade. The reason why we did not left the trade to continue long is, you can see still in this retracement, the retracement has heavily come down with continuous red candles. So even though we were taking buy entries over here, the first one and now the second one, we still have in mind that the retracement is very sharp, continuous red candles. So because of that, there's a chance where the price could have hit our entry, meaning price could have come here, price could have gone up, but then price could have further come down. There's a possibility because of this strong price movement down. So because of that, we did not hold the trade for longer time. So it was another quick 1-to-1 profit grab over here. So that was the second entry with take profits, which was our volume profile based trend setup. But then let me show you something very interesting after that. Over here, what we noticed was, as you can see, the price was unable to push all the way up. So this price swing retraced, but as you can see, the price was unable to go all the way up, because if the price is going to go up, basically the price, once it retraces, it should make a break of structure and move up. Now we are also mindful, because in this price push down, you can see some bearish fair value gaps have been formed. So we are very mindful in taking the bullish entries. But now once the price was unable to push up here further up, the price retraced down. Now if you look into this situation from price action concepts, just pure price action, we call this as our set 1 set 2 theory. What that means is, if you look over here, the price pushed up, then you can see it retraced, and then as I said, it was unable to push up. So when it's unable to push up, we consider this as our set 1. So that the set 1 meaning try 1, so the set 1, or we call it as try 1, try to setup. So the set 1 was unable to push up. In that case, in pure price action, then there's a chance where it will make a set 2, meaning it will try to retrace further down and grab further liquidity, and then there's a chance where the price will move up, which is the set 2. So set 1, then set 2, like 2 V's, like V, first V, second V, or U, can V or U, it's like a shape of a character. So set 1, then when it makes a set 2, what it basically does is it grabs liquidity. So we noticed that wicks were formed in the set 2 area, and what we did was we wanted to see what the price is doing. So we waited till a set 2 get formed, and then we noticed the wicks over here. And then what we did at that time was, when this red candle formed with a wick, then basically we, at that time, we went into the footprint chart. So if I zoom the candles, then now this is a footprint chart. So at that time, basically this is that candle over here. If I just go down again, you will see, right? So this candle, I'm talking about this one with this long wick. Now I'm again zooming that. So you can see this is that footprint of that candle. So you can see in that area where it made a wick, we noticed negative delta over here. So basically, if it's positive delta, it will be blue color. If it's negative delta, it will be red color. So positive delta means buyers are in control. Aggressive buyers has emerged. If it's negative delta, that means aggressive sellers. So you can see in this area, it's red color, which means it's negative delta. So when you see negative delta, basically that is aggressive sellers has been in action. Now, when aggressive sellers are in action, the price should go down. Now you can see in this area, the aggressive sellers push the price down. That's why it's red color, negative delta. However, you can see the price did not go down. Instead of that, price went down and came up again and formed a wick. When we see this, we call this situation as absorption. So basically what has happened is, if you would like to learn the trading strategies we use, click the link given in the description below to access the full free course and use that knowledge to get funded and start trading like a professional. The aggressive sellers tried to push the price down. However, there has been a wall of passive buyers sitting here. Now why that happens is, if I zoom down again, you can see, look at this high volume cluster over here. So this is where smart money, big banks and large institutes have built up their positions. So there's a full of buyers, smart money and large banks, big institutes over here. So basically they will defend their buy entry. So when the price retraced down, there's a chance where this volume point of control and this high volume cluster acting as support, and then the price pushing up. So because of that, in this area, there is a chance of passive buyers sitting as a level, as a wall. Now that is why you can see over here, even the price pushed up strongly with displacement, right? Now, then over here again, if I expand this candle over here, so even though aggressive sellers try to push the price down, because of that reason what I explained, the large wall of passive buyers sitting here, meaning buy limit orders. So when I say passive buyers, it's buy limit orders of large smart money and big banks, large organizations, has been sitting here and absorbing these aggressive sellers. So basically what's happening here is, even though the aggressive sellers try to push the price down, that large wall of passive buyers, that means buy limit orders, right? That is the beauty of using footprint charts and volume profile analysis, because if you don't use footprint charts and volume profile analysis, if you just look at basic candles, you can't see this story happening, what I'm explaining here. So as smart money traders, what we do is, we look into volume profile and footprint, and we try to understand what the big banks and institutes are doing. So that is what I'm explaining you in this live stream over here, so that you can understand the story behind this trade. So again, if I expand, so then that aggressive sellers has been absorbed by passive buyers, by limit orders. So, and that is why the wick was formed into this candle over here. So once we see that, what we did after that was, we waited to see what the next candle would do. So this is the 30-minute chart of Euro FX futures. So basically what we waited was, we waited till the next candle completes, the one after that. Once that candle completes, and while that candle being completed, what we did was, we looked into the footprint of that candle, which is over here. Then we can see positive delta values, that means the blue color values being formed, and a green color candle. So what that means is, now we can see it confirms that buyers are in control because the negative delta now has changed into positive delta and a green candle. Then soon after the green candle was printed, after that 30-minute candle was printed, that is where we entered our third entry. So basically what we did was we placed a buy order slightly above that candle over here, because once this 30-minute candle was printed, basically what happened was it started here, it went all the way up and it came down here, right? Soon after we noticed that, we place a buy limit order just above that candle. So this is the volume profile based footprint analysis. So this is what we call as order flow analysis. So once we complete this order flow analysis, we place the third entry, a buy order over here, and we kept our stop loss below this red candle over here, basically below the swing low of this point. So because once this green candle was printed, this is a swing low. Now if we are taking a buy entry, we are looking for a swing low to place our stop loss. So below this swing low is where we place the stop loss over here, and then you can see the price immediately tagged our entry. We placed a buy stop order because we place it above the price, so it's a buy stop order. So the buy stop order got triggered, and then you can see we were targeting this swing high, because if this is a price swing up, then if this is the retracement, so set 1, set 2, the retracement, and then we can see we saw aggressive sellers absorbed by passive buyers, and then we can see negative delta change into positive delta and a green candle printed. So with all that confirmation and confluences from volume profile analysis and order flow analysis, we placed the buy stop order and stop loss below this, and as I said, take profit to be in this area of this swing high. So in that trade we banked around 1 to 6 risk to reward trade profit. Now why are we not holding these trades long? Because in this retracement, as I said earlier, this bearish fair value gaps and this red candle, so we are very careful in taking these buy entries, but we are taking it with solid volume profile and order flow analysis, right? So that is where we banked 3 profitable trades over here, right? So that's a live analysis of the market and the trades we have taken. Hope you guys got some insightful information from this live session. All the best for you guys. If you would like to learn the trading strategies we use, click the link given in the description below to access the full free course and use that knowledge to get funded and start trading like a professional. Okay, so it's end of the video and we will see you in another video.